Hello, my name is Randy Wostratzky, Director with the Spectrem Group. I'm happy to be joined today by Kent McDill, Spectrem's Senior Writer, in our November 2019 webinar to talk about our latest data from our monthly Affluent Investor Confidence Indices, as well as our most recently published report in the 2019 Wealthy Investor Series on parenting and financial issues. I also look forward to giving you some more details about the Wealthy Investor Series subscription. In addition to that, our visual analytics technology. Before I get into parenting and financial issues, Kent is going to review our October Spectrem Investor Confidence Indices. Kent.
Thank you, Randy. I'm here to present to you the results of the Spectrem Investor Confidence Indices and the Household Outlook for the month of October 2019. As you can see, there's not a significant change in the indices from September to October, so we're going to concentrate a bit on where the Spectrem Confidence Indices are currently from a historical perspective this month. This chart shows that both the Spectrem Affluent Investor Confidence Index and the Spectrem Millionaire Investor Confidence Index saw slight drops in October. These drops occurred despite all of the stock market indices remaining near all-time highs. Several corporate earnings reports came in indicating mixed results during the month, or during the time of the survey, which was October 18th through the 21st. And the political picture was severely turbulent, with impeachment hearings going on and liberal Democratic presidential candidates Bernie Sanders and Elizabeth Warren challenging Joe Biden for that party's eventual nomination. Investors may be reacting to any of those indicators as they state a drop in their overall confidence in investing in America. The top portion of this slide shows how the Spectrem Confidence Indices have reacted over the past year. And you can see that since that significant jump in June, confidence has been down among both sectors, and that increase last month has been erased. In the past year, the SMICI, which is the blue line on this chart, has been in double digits only twice, and the SAICI, which is the orange line, has peaked at a rating of 6 over the past 12 months. Historically, those are both unusually low, and seem even more so in light of the current stock market success. The bottom chart shows the progress of the two confidence indices since their inception in 2004. You can see that the indices in 2019 have been generally lower throughout than they were in 2017 and 2018. With the U.S. still 1 year away from the next presidential election, it's going to be interesting to see how the confidence in investors rates over the next 12 months. Looking at the individual components used to create the Spectrem Confidence Indices ratings, you see that once again there was an increase in cash investing in October and in individual bond investing with a corresponding slight drop in stock and stock mutual fund investing. None of the differences from September to October were large, but investors are more likely to increase their allotment into safer products at this time as opposed to equity stocks. One positive from the October index is that both among non-millionaires and millionaires, more investors plan to increase investments in the coming month. The Spectrem indices measure those not investing, meaning those investors who are not going to add to their investment allotments in the coming month. And both of those numbers decreased in October, indicating greater participation among investors. That they are more often investing in cash and bonds rather than stocks indicate they want to participate but are uncertain where the stock market is going to go. Keep in mind, we are only about 3 months removed from that huge recession scare that went on in midsummer. And investors realize with the stock market remaining so high, a downturn is possible, if not inevitable. The Spectrem Household Outlook is a measure of how investors feel about the future regarding 4 components of their household finances. In October, the overall outlook improved slightly, moving up 3.5 points to 18.1, which is 10 points higher than that very low mark of 8 back in August. Another month of improvement in the household outlook next month would get that indicator up near the 20 mark, which is where it stood for 6 months straight in the middle of 2019. This chart shows how the 4 components of the outlook performed in October. Household income rose 8.4 points from September and is now at 31.20, which is a number last reached back in the early months of 2007. That's a significant finding. Investors are pleased with their daily income rates. But once again, the outlook for the economy turned downward and still is in negative territory at negative 14.5. The last month in which the overall outlook for the economy was in positive range was back in July. And the last time the outlook for the economy was in positive double digits was in September of 2018. More details about the Spectrem indices and outlook are available upon request. Now I'll turn this conversation over to Randy, who will discuss our upcoming study, Parenting and Financial Issues.
Kent, thank you so very much. As I previously stated, we're talking today in the second half of this webinar about the fourth of 6 reports in Spectrem's Wealthy Investor series, with this one focusing on parenting and financial issues. One of the questions that we asked has to do with financial independence relative to the children of these respondents. Those that either do not have children but plan to have them, they have dependent children, or they have non-dependent children. And we talked about what type of obligation they might have relative to financial independence. And you can see here that amongst those who don't have children but plan to have them, only 61% say that they should aspire or try to become financially independent once they get older, which pales in comparison to those who have dependent children or older non-dependent children at 92% and 96% that want their children to be financially independent. As you can see here from the various percentages on the left-hand side of our screen, those that have dependent children or non-dependent children at 92 and 96% do make up a majority of the respondents. Those that don't have children but plan at 61%, while certainly a striking piece of data, it does not have as much of an influence on the total percentage responses. Next, we asked a question of the 3 different types of respondents relative to when they consider children to be financially independent and no longer relying on their parents for financial support. The first striking data point here is among those that have dependent children, 36% say that they should be financially independent and no longer rely on their parents for financial support after completing college or their technical education. And then when you look at the bottom of the screen, those that are older, that have children who are no longer dependent on their parents, you have 24% that say children are financially dependent when they're able to pay their own bills. And then in the middle of the screen here, amongst all 3 of the different respondent types, you have either 34 or 35%, so just over a third, that say financial independence is defined as when they have a full-time job. The concept of home ownership is always something that comes up in the research that we conduct with wealthy investors across the United States. And especially in recent years, it's becoming more and more of a contentious issue among the generations. As you can see here, that continues to be where the oldest respondents, those that have children that are no longer dependent on them, 9 of 10 think that purchasing a home as a primary residence is a prudent financial decision, as opposed to 81% who still have children that depend on them, and 67% that don't have yet children but plan to have them in the future. So certainly the younger generations there at just over 2/3 do not find as much value as those that are older relative to home ownership. Same thing when it comes to getting a college education. You have those that have dependent children at 87% and those that do not have children at 64%. And I think that quite a bit of this discrepancy and this particular data point at under 2/3 thinking that a college education is very important for their children is due to the amount of debt that the younger generations have been saddled with relative to achieving a college degree and the impact that has had on the way that they manage their financial blueprint. So again, the younger generations have a very different perception of the value of a college education. So when you're talking with these younger wealthy investors, you have to keep in mind that college savings isn't always something that they're going to want to address, and certainly right now if they do not have any children. We asked some questions around when a financial plan was first created. And again, you do see a total there in green, and then among those who do have dependent children versus those who do not have dependent children. And those that still currently have dependent children, you have almost 50% that say that their financial plan was created prior to having children. And then on the flip side of that, you see on the bottom left-hand side of the screen, those that have non-dependent children right now actually created their first financial plan after having children, but there was no influence from their children on the creation of that first financial plan. So that's something that really is quite striking too when you go on to the right-hand side on the top, where you see among those who have dependent children, only 4% say that that financial plan was created after the children were no longer financially dependent. And a much higher percentage of those that don't have dependent children cited that as the timeline for creating their first financial plan. Again, the Parenting and Financial Issues Wealthy Investor Series report is 4 in a series of 6. You can see the final 2 that we have due up here in 2019 on technology and social media relative to financial decision making, as well as portfolio trends and asset management decisions. We have our 2020 schedule ready, so if there's any interest in learning more about that, or in learning more about our visual analytics technology and how it can be a benefit and value to you, your firm, your colleagues, and the clients that you serve, please do feel free to reach out to me, Randy Wostratzky, and let me know. I'd certainly welcome the opportunity to speak with you about this and all of our research here at Spectrem. On behalf of Kent McDill, again, I'm Randy Wostratzky with the Spectrem Group. Thank you very much. Have a great day.